Today, we will be talking about make or buy decisions, or also called outsourcing. Before we can dive into details, we will have to differentiate between making and buying. Making means that whatever product or service you're selling, you're making or performing it yourself. You're manufacturing it. That means you're using direct materials and direct labor to assemble the product or perform the service. When you buy, someone else performs the service or assembles the product for you. Buying can also be called outsourcing. Outsourcing means you enter a contract with another company and ask them to manufacture the product or perform the service. This can be done domestically or internationally. The company then decides whether they want to distribute the product themselves or not. When you're trying to decide whether you should outsource or not, there are some key questions that need to be considered. The first is the cost per unit when purchasing versus the variable cost per unit when manufacturing. The next consideration are the fixed costs that the company might be able to save. By outsourcing, companies might also free some of their capacity to use it in different ways. The last question to consider is the volume needed. To answer these 4 questions, the managers will have to consider a lot of different numbers. To better understand the decision that managers have to make, let's look at the example of a bathroom appliance company and their bathtub department. The managers are currently trying to decide whether to continue manufacturing their own bathtubs or contract with an outside company to have them manufactured. First, let's look at the costs of making the bathtub. This cost sheet shows the variable costs of manufacturing one bathtub and the absorption cost, including the fixed overhead cost. We can see that the variable cost per bathtub is $400 and the total cost per bathtub is $600 if we consider a number of 500 units. On the other hand, the bathroom appliance company has started negotiating with a contract manufacturer who's willing to produce bathtubs at $500 per unit. To compare the two alternatives, let's evaluate each of the 4 questions by itself. The first key factor is the variable cost per unit, which is $400 to make and $500 to buy. Now, if this was the only factor to consider, the managers would decide to make the bathtubs themselves. However, other factors need to be considered as well. Next, we will look at the fixed cost that might be saved by outsourcing the production. There, the company could save $20,000 on machinery and supervisor wages, specifically related to the bathtub production. Most of the fixed costs, however, include insurance, rent, and tax costs that cannot be reduced. Just by looking at the pure number of $20,000, we cannot determine what option would be most beneficial because it would have to be included in all our calculations. The third consideration is the possibility of using that freed capacity to the company's advantage. In this case, the company does not have use for their freed capacity. Finally, the number of units needs to be considered, which in this case is 500 bathtubs. Now that we have looked at all the 4 different considerations, it is time to put the information together to compare the 2 options. In order to do so, we input all the information we have gained into a table to prepare an incremental analysis. This analysis shows us that the company should stick to manufacturing the bathtubs themselves because they can save $30,000 by doing so. Even though the company is saving some money on eliminating fixed costs, the cost difference of buying and making still exceeds those savings. So the final decision based on these costs is to make the product. This is one of the simpler examples where it was not a difficult decision for the managers to make or buy the product. Now, let's consider some different scenarios in cost increases or savings. We will influence each consideration by itself in the next 4 examples. First, we will change the variable manufacturing cost per unit. In this case, we will assume that the bathtubs actually cost $480 to make. Still considering the same number of units and savings in fixed costs as in the initial example, this variable cost per unit will lead to the decision that management would decrease cost by outsourcing the production. Now, even though the variable cost of making is still less, the savings in fixed costs exceed this difference and lead to the final decision of buying the bathtubs. Now, let's change our second consideration and increase the fixed cost savings from $20,000 to $80,000. All other costs return to the initial example. Even though the variable cost per unit is so much less when making the product, the increase in fixed cost savings eliminates that difference and leads to more savings when outsourcing. Therefore, the final decision would be to buy the product. Recall that our third consideration is the freed capacity, which we did not consider in the first example. Now we will change this assumption to a $90,000 increase in net income by increasing the zinc production. These added $90,000 increase the final outcome by $60,000. Hence, the managers would decide to buy the product and benefit from an increase in zinc production. The last consideration is the volume, which we will decrease to only 100. In this case, the fixed cost savings would exceed the savings from producing the bathtubs themselves because of the reduced volume. The final decision for the managers in this case as well would be to buy the product. Looking at all these different scenarios shows how many decisions managers have to make and how many different alternatives there are with countless variations that need to be considered. To make managers' lives a little bit easier, they can use an equation to calculate the indifference point of making or buying the product. The value is the maximum amount a company would pay at a given number of volume and a given number of fixed cost savings to outsource the product. Managers use this indifference point to enter negotiations with manufacturers. Now, let's look at the equation and apply it to the bathtub company. To find the indifference point, we equate the cost of making the bathtubs and the cost of buying the bathtubs. On both sides, this includes variable and fixed costs. Remember that when making the bathtubs, we had variable costs of $400 per unit and a total of $100,000 for fixed costs. On the other side, we could buy the bathtubs for $500 per unit and reduce fixed costs to $80,000. The goal of using this equation is to find the cost per unit on the buying side. When solving for that component, we receive a value of $440 per unit. This equation is a very helpful tool for managers when trying to find a price they are willing to pay. However, this varies depending on all four key factors that we considered earlier: the variable cost per unit, the fixed cost, the potential for use of freed capacity, and the volume of units needed. Finally, we will look at the potential advantages and disadvantages of outsourcing. First off, advantages of outsourcing are that the company might be able to focus on their core competencies more, which might be everything but manufacturing. This goes hand in hand with the idea that there are companies whose core competency is manufacturing, so that our company could benefit from their knowledge and expertise. Moreover, our company could reduce investment risks by not investing in expensive machinery and manufacturing plants. However, outsourcing could also come with drawbacks. The main disadvantage of buying products is that the company loses control in different aspects. These aspects include product quality, scheduling, work environment, and others. In order to increase some control, the company might have to hire additional personnel to monitor the outsourcing process, which could increase costs. Overall, every company needs to decide for themselves whether outsourcing is an option for them or not. This decision depends on many variables and should have to be reconsidered throughout time. Thank you for watching, and we hope that we could help you understand the difference between making or buying a product.